Good morning, ladies and gentlemen. Once again, we are seeing floods, damages, loss. The images that we saw in the walk-in video this morning are surely older, but they could have been taken yesterday. So I think our hearts and thoughts are with those that have been hit, not just yesterday, but in the previous occasion, some repeatedly. I think we must hope that human life has been spared this time, though as of this morning, some are still missing. This is another reminder of the seriousness of the climate issue that has been mentioned in the previous speeches. We cannot be in denial. The accelerating change in the Earth's climate has increased the frequency, the intensity of river and coastal landslides, droughts, and forest fires worldwide. Europe in particular is warming quite fast. According to Copernicus, the European satellite monitoring system, the average temperature for European land in August this year was more than 1.5 degrees centigrade above the 1991-2020 average for the same month. In addition to climate-related events, other natural disasters such as earthquakes, tidal waves, volcanic eruptions, bradyseism can have a dramatic impact on the economy and society. The issue of natural disasters and more generally catastrophe risk, one's confined to scholars of the so-called hard sciences, such as physicists, biologists, has become an area of concern for economists, sociologists, and lawyers as well. As a consequence, one sees, among other things, more and more attempts at measuring the economic impact of natural events in a reliable way. The 2023 European State of the Climate report estimates that direct damage to property generated in the same year by floods, inundations, and fires, disregarding that is indirect damage, at more than 13 billion euro, and the human toll at 151 deaths. Over the past few years, there's also been a growing attention in international fora to natural disasters as a potential source of systemic financial stability risk. The literature on disaster relief suggests that a purely exposed approach to damage repair and loss compensation is likely to be suboptimal. Prevention, and I think this is already been said, prevention is necessary at various levels, in various forms. In my speech, as befits the occasion and my role, I shall concentrate on the role of a well-regulated insurance industry can play. It is not a minor role. Let's start by observing that compensation can be very costly for the public finances when an event occurs. It is also difficult for the private insurance market to provide adequate cover for rare but catastrophic events. Ex ante risk mitigation and damage prevention and limitation are therefore desirable. Moreover, the nature, the features of catastrophic risk appears to require an appropriate interaction between public relief intervention and private insurance schemes. Certain valuable principles of policymakers have recently been summarized in a decalogue for natural disaster management drawn up by the OECD and the IVASS, International Association of Insurance Supervisors, under the auspices of the Italian G7 presidency, the high-level framework that has been mentioned several times. IVASS has actually actively contributed to this document with technical input. The OECD IAIS framework states that an effective mechanism for protection against natural catastrophes requires the cooperation of many stakeholders, both public and private. On this point, last year, I mentioned the pros and cons of two ways of sharing the costs of a catastrophic event: public intervention and private insurance. But I should also mention that when things like those that we have seen in the walk-in video and the images that we see these days on the new flood in the north of Italy, also remind me of the role that non-profit organizations, volunteers often play, the crucial, important, very laudable role that they play on these occasions. But let me go back to the institutional, formal aspect and say that there are basically two ways: public intervention and private insurance. Last year I also claimed that an adequate diffusion of insurance cover is not just a question of individual choice, but has elements of a collective issue. Allow me to recapitulate very briefly the main points that I made on that occasion. Public intervention will always be needed to some extent because not all risks are effectively insurable, and because in the case of truly catastrophic events, some form of coordination and reconstruction and its coordination of the reconstruction and its financing is indispensable. Its drawbacks, however, are first that when an event occurs, there is uncertainty about whether compensation will be provided and to what extent, who will be eligible and under what conditions. And second, that experience tells us that the implementation of relief measures often comes very late after the event. Third, that the distribution of the tax burden, being naturally based on pure discretionary ex post mutualization, it can hardly be designed in a way to create the right incentives for ex ante risk prevention or mitigation. Private insurance contracts exploit the opportunities of diversification between uncorrelated risks and can rely on risk transfers and pooling techniques with benefits ultimately shared between the insurer and the insured. If well designed and implemented, it is certain, prompt, directly commensurate with the damage individually suffered. It can provide powerful incentives for prevention. However, especially if there are no provisions for mandatory coverage, it is subject to adverse selection. Moreover, it cannot achieve the redistribution goals that public intervention may instead wish to pursue. A recent study made by the Bank of Italy together with the University of Florence looks at hydrogeological events that took place in Italy between 2010 and 2018 and their effect on firm survival and performance. In the 3 years following the event, the affected companies are significantly more likely than others to exit the market, and even if they survive, their profitability declines and staff numbers decrease. Insurance can mitigate those effects at the individual level. In addition, the existence of externalities makes underinsurance of such risks also a matter of public interest. The destruction caused by a natural disaster has consequences that go beyond those directly affected through the dense network of interdependencies that characterize these economies. The swifter availability and granularity of insurance relief compared with that provided by discretionary exposed public intervention should contribute to reduce those consequences. Of course, it is not only insurance that can provide incentives to make businesses and households less fragile and more resilient to disasters. Supervisors, for instance, have been insisting for some time that banks should take physical and other nature-related risks into account when screening for the financial merits of projects. Risk mitigation measures should be a factor in setting conditions for loans and other forms of financing. As is well known, Italy is particularly exposed to seismic and hydrogeological risk, including landslides and as we have been sadly reminded these days, river floods. It also had a 9,000-kilometer coastline, of which 3,400 kilometers, especially in the upper Adriatic Sea, can suffer coastal floods. Yet, according to analysis by various research centers and EIOPA, Italy, along with Greece, shows in Europe the highest protection gaps. That is to say, the highest gap between natural catastrophe or NatCat risk exposure and insurance protection from such risks. From 1980 to 2022, about 97% of the losses incurred from earthquake and floods was uninsured, the highest underinsurance level thus measured for this type of risk in the European context. This protection gap arises from both the demand and the supply side of the insurance market. Several aspects can explain the public's wariness in demanding protection: low awareness of risk and of the availability of insurance product, difficulties in understanding complex policies with regard, for instance, to guarantees, benefits, exclusions, high prices. An expectation that public sources will compensate some losses may also indirectly play a role. On the supply side, insuring against catastrophic risks, catastrophe risk, can entail, if and when rare but high impact events occur, heavy and concentrated losses for insurers. Modeling such tail risk is difficult, especially as climate change is likely to shift the probability distribution of climate-related catastrophes in ways that are hard to predict. This makes the provision of insurance technically challenging and may induce companies to raise the price of cover significantly. Much the same issues arise for reinsurance. In fact, as the effects of climate change become apparent, insurance companies are finding it more difficult to reinsure themselves in the market. The special features of catastrophe risk appear to call for carefully designed measures to improve the framework for NatCat insurance and provide some form of public co-insurance, so to speak, while leaving the market to perform its allocative tasks as efficiently as it can. We therefore welcome the introduction of a mandatory NatCat insurance scheme for businesses, together with a set of policy support tools by the 2024 budget law. In fact, we had been advocating such a measure for some time. The law will bring Italy closer to other European countries, including France and Spain, and non-European ones, including the United States and Japan, that have already provided for either mandatory or semi-mandatory models of insurance against natural disasters. The technical details, as has been mentioned, need to be defined by decree to be issued by the Minister of the Economy and Finance and the Minister of Enterprises Made in Italy, which is in the process of finalization. Several points are crucial for a successful implementation. The scheme must be technically sustainable on the insurer side and affordable for the insured so that universal coverage is smoothly achieved. It's also essential that reimbursement are and are perceived to be quick and predictable. The extent of the cover offered and demanded needs to be adequate. The implementing decree will specify a number of important details, including the events to be covered and the criteria for exclusion. Such element will largely shape contractual practices concerning, for instance, the amount insured, indemnity limits, deductible, and excesses. The success of the scheme hinges on a careful definition of them. All the main actors concerned should have a voice in discussing the details. It's also important to ensure the consistency of the new provisions with existing prudential and supervisory rules for insurance. Countless details have to be faced, but they can be, and I think it must go ahead. We are ready to provide any technical assistance that may be required. The experience gathered from the implementation of the business insurance scheme will also be useful in case an extension of catastrophe risk coverage to households is envisaged, as I think the Minister just mentioned. Legislative initiatives in this direction are being considered. Ladies and gentlemen, let me conclude by saying that in general there are two further key ingredients for reducing Italy's insurance protection gap. Greater awareness of risk and of the risk protection tools available on the public side, constantly improving clarity and transparency on the industry side. Citizens and businesses that are well informed on risk will likely be prepared to seek more protection and to adopt mitigating measures that reduce the risk of loss and at the same time improve the conditions at which insurance can be provided. Insurance, for their part, should constantly strive to improve the structure and language of contracts, as well as all aspects of the distribution of policies, ensuring that contracts are as clear, simple, and readable as possible, and that potential customers are in the best position to understand the price and extent of coverage and other conditions, is important, not only in the name of fairness, but also in order to guarantee that market competition functions efficiently. Insurance education, transparency. At IVASS, we are committed to contributing to both these aims within our mandate as best we can. Thank you very much.